Hello traders, you're welcome to this video. In this particular video, we are going to be discussing the 200 moving average, 200 period moving average. We are going to be looking at a very important and profitable strategy that you can use for your trading. Although this strategy does not guarantee profits, mind you, does not guarantee profit. However, it can be a good addition to your trading toolbox. Okay, so now the 200 moving average is a widely used technical indicator. Just a brief description of the 200 MA. It's a widely used technical indicator and it helps you to identify trends and potential entry and exit points. Now that 200 indicates 200 days, 200-day period, right? 200-day period. The calculation is done based on 200 days. It's mostly used by swing traders. Is mostly used by perhaps day traders or swing traders because it considers price action in the longer term compared to smaller moving averages, right? However, you can choose whatever time frame that you want to use the 200 EMA on. Any time frame you want to use it on, it is going to function there. Yes. Meanwhile, let us set up the 200 MA on our chart. Just go to insert, indicators, moving average. This is the MT4 platform, So I am describing how to set it up on the MT4 platform. Now you can put in the 200 value here, then you can choose between SMA, EMA, or smooth or linear weighted moving average. But for this video, we're going to be using the simple moving average. We already discussed the exponential moving average in a previous video. Okay, so you can select the style you want to use, and then you can select the thickness of the moving average line, and for the levels we can just leave this as the default, and then for this we can leave this as the default as well. Okay, click on OK. Now we have it set up on our chart. How do you use the 200 SMA to identify bullish and bearish signals? Now basically, when the price of the asset is trading above the 200 EMA, the 200 MA in this case is an SMA, but whether it's an SMA or EMA or smooth or linear weighted, when the price is trading above the 200 moving average, it suggests a bullish trend. Now you would want to look for buying opportunities when you find the price trading above the 200 MA. Now these would have been potential buy opportunities here, another one here, another one here, another one here. That is in one single bullish trend. We can have multiple buy opportunities because every time that the price bounces off the 200 EMA, it's an indication of a buy signal because the 200 EMA serves as a dynamic support and resistance levels. Now, whenever you want to use another MA for additional confirmation, because there are some traders that usually use another moving average for additional confirmation, and we are going to try that out. But before that, let us see how to identify sell opportunities using only the 200 EMA. Now whenever the price of the asset is trading below the 200 MA, below the 200 SMA, below the 200 MA, it is an indication of a sell signal. So as price dropped below the MA, you could have considered entering a sell trade here, stop loss above the swing high, take profit at the nearest resistance levels or at the resistance level of your choice that is not too far away, so that price do not eventually reverse against you, right? Okay, and then we could have considered exiting. An exit signal could be when the price crosses back above the 200 MA. That is for a sell trade. Now as for a buy trade, when the price is trading above, when price crosses above the 200 MA, it is a buy signal. You can enter your buy here, you set your stop loss below the swing low, and your take profit can be at the nearest resistance level, or when price breaks below the 200 MA, you can now exit your buy trade. Now let us use one of the popular strategies that traders usually use that is adding another moving average to the chart. Now we are just going to change the color of this so that we can easily identify it, right? I'm going to add the 50 MA. The 50 SMA is also a common period of MA that traders use, for the crossover strategy. Okay. Now some traders use the crossover strategy with the 200 MA. Now the strategy simply means that when the shorter moving average, which is the 50 MA in this case, crosses above the 200 the 200 MA, when the 50 MA crosses above the 200 MA, it's an indication of a buy signal. So some traders usually use this strategy, combination of the two moving averages, the shorter period and the longer period. This is called the golden cross, right? When the 50 MA crosses above the 200 MA, it's a buy signal. So we would have considered entering a buy around here. That is if you wanted extra confirmation, because this additional MA is just for additional confirmation. If you are using only the 200 EMA or the SMA rather, you can just wait for price to cross above it and you would have entered your buy right from here. But for additional confirmation, you can add the 50. You can add the 50 SMA for additional confirmation, and that would mean you buying after this golden cross occurred. And then your sell signal can be when the 50 MA crosses below the 200 MA. It means that we would have ridden this trend all the way from here to here. That would have given us almost 1,000 pips, right? Okay, so that is how the golden cross works. Some traders use this for additional confirmation, the 50 MA, right? Now, as for bearish signals, the reverse is the case. We've already talked about how to identify bearish signals with the 200 MA alone. But when you add the 50 MA, you just have to wait for the 50 MA to cross below the 200 MA. As we can see here, after the crossover happened, the price continued to sell, and then you can consider exiting your trade after the crossover in the bullish direction occurs. That will be your exit signal for a sell trade. Now this is called a death cross. It's called a death cross when the shorter moving average crosses below the 200 MA. It's called a death cross, signaling a potential downward trend. Now some traders use this for additional confirmation. Now we've already discussed how to enter your trades based on signals from the 200 MA and also additional confirmation from the 50 MA. Now, in terms of setting your stop loss, because the 200 MA serves as dynamic support and resistance levels, after entering a sell, for example, you can just set your stop loss some pips above the MA, just right above the swing high or some pips above the MA, because the MA is a resistance, right? So you don't need to start looking for another resistance which will now increase your risk. You can just set your stop loss above the MA, right, for a sell trade, right? And then for a buy trade, you can set your stop loss just below the MA, maybe below the candle that cut through the MA, for example, below here, right? And that will also give you a tight stop loss. Okay, because the MA is serving as dynamic support and resistance levels, so it means that you are setting your stop loss below a support level, which is the MA in this case, right? Now, you can also combine your 200 MA with other indicators such as the RSI for momentum to gauge your momentum and your stochastic oscillators or any other indicator of your choice. You can decide to use those also for additional confirmation, guys. And you can use the 200 MA on your daily charts or on your weekly chart. You can use it on the daily chart. We were analyzing on the 4-hour, but you can use it on daily. You can still use it on the weekly chart. In fact, you can use it on any time frame that you want. But the smaller the time frame, the more the noise. You see, the noise is more in the smaller time frame, and the signals can be less accurate on the smaller time frame, but it doesn't mean that you cannot use it on the smaller time frame. So even if you are a scalper, you can still use this indicator on the smaller time frames, right? You actually can. So whether you're a short-term trader or whether you are a long-term trader, you can use the indicator on any time frame, whether the 1 minute, 5 minutes, 15 minutes, up to the 1 hour, up to the 1 day, even up to the 1 month. You can use it on any time frame of your choice. So basically, that is how the 200 MA works. I hope that you found this video insightful. Kindly like, subscribe, and click on the notification bell so that you can get updated on further videos for more trading insights. Cheers guys, and happy trading.